Wanted to talk about TLT stock. We've got some big economic data hitting next week, Wednesday, Thursday, and Friday. But I also wanted to talk about JNK stock. This is one that I've been playing around with a little bit here and there. Junk bonds, basically. It's an ETF that incorporates junk bonds. Now, next week, huge economic data could very easily push bond yields higher, the 2030 that the TLT stock trades against. And because of that, TLT stock and JNK stock could easily fall further. But how much further could these move lower? And that's where I'm really starting to look. The Federal Reserve is starting to shift gears with some of the things they've been saying, basically saying inflation isn't contained. They're not confident that they're going to hit that 2% target rate. So this is going to elevate interest rates modestly at some level. I don't believe the Federal Reserve would make any kind of moves prior to the November 5 presidential election. There is a meeting on the 6th and the 7th for the Federal Reserve. If they do move, that's probably when. Now they're starting to get some rhetoric going with talking yields higher. That might be enough. Regardless, at some point, the Federal Reserve is going to lower interest rates. In the meantime, with TLT stock and JNK stock dropping as low as it could, that becomes a long-term buying opportunity. Most of my trades are stock options, but I do put on portfolio positions such as wanting to go long these bond stocks or ETFs. I may easily go long TLT stock after next week. The idea is basically I'll sit on it for 6 months if I have to, but if the eventuality is we're going to hit a bottom with TLT stock and JNK stock, and from there, eventually things will move higher. I will be bringing in some kind of dividends, that's interest payments you get for holding on to these ETFs. Taxation is slightly different, but not much. Regardless, you do get some income coming in from holding these. Then it's a matter of if these turn back around once the Federal Reserve shifts gears and starts to lower interest rates. Let me show you a couple charts. Here we have the two charts. This is on the left hand of the screen is TLT stock. This is the 1 month chart. And then JNK below me, the chart down here on the right hand side. Again, junk ETF. JNK aptly labeled. I've not had confidence for months that the Federal Reserve is where they needed to be. And typically I do step in and I'll sell puts, I'll sell calls, I'll do whatever I do. And I usually do that the day before a big economic release, and I get out that next day. I bring in a few pennies here and there, and I consistently have been doing that. But I don't play the bigger moves. Specifically, if you look at TLT stock, towards the end of middle to the end of 2023, TLT stock started rising again. And I kept saying, no, this isn't, we're not there. So I would play short-term trades, but I didn't put anything long-term on because that's not how I looked at what's going on with the economy. I felt pretty certain inflation was not going to go away. It is not going away. The Federal Reserve may actually need to raise interest rates. Next week, Wednesday, we get durable goods. Should be a mirror image to everything else we've been seeing. Slightly higher than expected. Not much, but just slightly higher. Thursday, GDP, first look Q1. It's going to be huge. This will be a huge number that the market is going to be focusing on. Then on Friday, of course, we get the personal incomes and personal expenditures, my two favorite economic indicators. Along with that, the PCE price index, the deflator there, which is what the Federal Reserve looks at when they judge inflation. It's a slightly more sensitive to what we got last week, CPI. Just slightly more sensitive. And the Federal Reserve, they're consistently looking at the numbers they're looking at. They don't need to look at every single data point when it comes to inflation because although this is a government-produced document, they're fairly mirror images of each other. We don't expect too much of a surprise out of PCE price index next Friday, but it's still going to be a little hotter than expected, which is going to continually reiterate that interest rates are not going lower this year. And the Federal Reserve might actually have to raise rates. At the very least, what I think might happen is simply this: they talk up rates and wait and see. By doing that, they've really not done anything. That way, when November rolls around, they can say, well, we didn't do anything, if one event or the other occurs on November 5th. So that's still 6 months away, 5.5 months away. We'll see how that plays out. Regardless, I don't think we get anything more than rhetoric from this point until November. By then, I'll have a much better understanding of where inflation actually is and what the Federal Reserve could do. But I don't think they need to go more than, say, 50 basis points. So along the way, I'm going to start building up a position on both TLT stock to buy, with the idea that we see some pretty decent sized moves long term over the course of, say, 6, 9, 12 months. At the same time, I'm going to do exactly the same with JNK. My idea is that we push above 100 on JNK, probably go to 102, 104, 106. And I might tier in and I might tier out along the process, but that's all dependent on what happens. Now, my idea is simply this with the overall broader economy. Stock market will sell off. I don't want to be in stocks if the stock market is going to sell off. I will play the SPY stock like I normally do, but what I'm going to do is remove some positions that I can, take that money, put it into TLT stock and JNK stock with the idea that there's a bottom in there at some point and it's not going to get too ugly. But what I don't want to do is hold on for dear life while the S&P 500 SPY stock QQQ takes a 20% drop, which is a potential. It depends on what inflation numbers look like. So given that, I'm sort of removing as much risk as I possibly can. I don't see much downside risk with the Federal Reserve moving when it comes to, say, TLT stock or JNK stock. Yes, the Federal Reserve might raise interest rates somewhat, but if they do that, our soft landing might be more of a harder landing than a soft landing. At the same time, I keep looking at numbers for employment. We're at 3.7%. So I don't expect a continual increase in employment, which will continually increase personal incomes and push expenditures further and further and further. Basically, by building up supply over the past year and with the Inflation Reduction Act, we've pushed this economy to a full expansion level. Now, at this point, we may still expand, but not at the same high rate. And because of that, that might give the Federal Reserve sort of the pause they need in the economy that will keep inflation lower. Now, we are getting some numbers coming out with housing, not exactly robust. We'll just start right there. I am going to put a video out tomorrow on the housing sector simply because that's really a big driver of what we saw in inflation previously. Housing stocks might take a hit, but there's still a lot of potential profit with housing stocks. So I'll look at that probably tomorrow. Regardless, TLT stock, I'm going to wait until next week. I might front run that with either a strangle or a straddle, two option strategies where I don't know what's going to happen with the market, and I'll buy calls and puts on TLT stock with the idea that we get information, the market either loves it or they hate it. TLT stock either goes up or it goes down, and I'll make a quick profit. After that, I'm going to start building up a position long-term on TLT stock and JNK stock, actually holding the positions versus just playing options. Now, I'm not one to not play options all the time. Just because I'm holding positions, at that point, I'm also probably going to be playing around with options against these positions just to continually bring in a little more premium. My favorite position is to go short these options, take in that premium, and just wait and see what happens in the next economic release. We usually have a pretty big number every single week, so it's something I can do on a weekly basis. Regardless, for those of you who've been following me for a minute, I'm shutting down my website. Substack. I've got the link down below. I'm putting together content, free email newsletter for my economics and stock market, and then I also have the value investing newsletter as well. Make sure to hit the link for the Substack. It's growing quite nicely. Thank you so much for that. At the same time, the channel here, if you're just finding me for the first time, like and follow. Thanks so much for the comments. We'll see you in the next video.